Yes, yesterday we did get the news that Nitel, the state-owned telecom firm, we have a preferred bidder emerging, which the President Jonathan has approved. That consortium is the New Generation Consortium, which comprises China Unicorn and a Dubai-based Minerva firm, and of course some local investors. Joining us to take a look at that deal is Demola Eleso, who is chairman at what's the company? Contact Solutions. Beg your pardon.
ConSol.
Beg your pardon there. Okay, let's take a look at the deal again. They've sold at 3.3 billion. They valued Nitel at 3.3 billion. Very interesting valuation. Many people are saying it's very expensive. But let's go a bit back and find out why has it been so difficult to sell Nitel? Because in the past, we know that in 2001, there was IILL trying to buy it at 1.3 billion. We had Transcorp trying to buy at 750 million. And finally, it seems that we are going to get a buyer. Why has it been so difficult to sell Nitel?
Well, in my opinion, and I think the general industry opinion is that Nitel had a sort of unclear structure, being a government company that had the sort of historical, for want of a better word, bad management. We couldn't ascertain the true asset values and what assets Nitel really had. People couldn't ascertain the amount of debt that Nitel had accumulated and accrued over the years. So there was all sorts of conflicting reports, which made it difficult for what I would call the more senior and recognized buyers to make a bid. On top of that, you've got the situation in which other bidders, potential buyers for Nitel, were also worried about the amount of staff and what would happen in the case that they took over the company and they needed to either downsize the company, and who would handle the sort of the union-based situation, who would handle the debt owed to staff either in pension fund or in accrued salaries, and so on. So this really mired many of the deals that what I would call the senior players in the telecoms industry who would have participated in buying Nitel a lot earlier.
Well, it's been 9 years since the first bid, and that first bid was at 1.3 billion. This one is coming out at 2.5, and that values Nitel as 3.3 billion, which is a tenth of MTN's valuation, which obviously has operations in well over 20 countries. It sounds pretty aggressive. What are your thoughts on that valuation?
My thoughts are that this group has overpriced the asset that they're buying. We also have to recognize that Nitel is not being sold as a going concern. It's really being sold as a bunch of assets. And when I look at the assets on ground that Nitel has, I can't come up with a $2 billion value for it. However, clearly they have done their research, and they believe that 2.5 billion is worth the assets they're going to get. And the assets have been split into sort of 6 different groupings, starting with the SAT3 cable, which is what most people really had their eye on, which is the submarine cable that basically connects Nigeria to Europe and going down towards South Africa. And then the various other businesses, including Nitel, the mobile arm that's got a GSM license, the transmission company that's got transmission lines crisscrossing Nigeria, the switching business that's got the exchanges in and around the country, digital and some old analog exchanges, and thereafter the satellite and gateway businesses, plus the internet ISP offering that Nitel has the potential to offer.
Well, technically, it's not a done deal, because we do know that the bidders still have to pay the balance of 1.7 billion after paying the 750 million reserve money. Now, give us your thoughts on, assuming that this goes through, how does this deal impact the telecom sector in Nigeria? We know Nitel was obviously the biggest player up till 2001, when all the GSM companies came on board. But obviously since then, its fortunes has dwindled. Fixed lines have come down significantly. I think even its GSM operations have dwindled significantly. It doesn't seem to be a major player in any of these areas. How do you see things going forward? Is this a game changer for the industry in your view?
Yeah, well, basically, Nitel is dead and needs to be resuscitated. I mean, that's, you know, the old Nitel, there's hardly anything left as a going concern, like I say. So the new buyers have to resuscitate it and energize it.
Which will cost money, obviously.
Which will cost a lot of money. In my estimates, you know, over and above the 2.5 billion they need to pay the government for the right to acquire the assets, they will need to spend about $1 billion to $2 billion minimum in basically revitalizing, you know, some of those businesses, if not all of those businesses, assuming they intend to carry on all of those businesses. On the positive note, you know, we do lack a national fixed licensed operator in Nigeria. And there is scope for Nitel or the new Nitel with its new owners, to embrace and provide a national offering of high capacity broadband fixed services that are needed by mostly I would say premises or businesses that are inside of premises in and around the country. So I'm talking about, you know, a bank with 400 branches, or a mining business with 2 or 3 branches, maybe a head office in Abuja, a regional office in Lagos, and a few satellite offices in, you know, Zamfara or in Taraba or wherever. I mean, nobody today is providing the kind of business services that those sorts of businesses require. So there is scope, you know, for a good buyer and a good operator to deliver those services to that segment of the Nigerian market. So there's money to be made there.